All right, welcome back. Gonna do the video a little bit differently tonight. Clarity has been lacking in the market for me. I haven't really had a lot of time to look at the market as much as I would have liked to, specifically as how I'm not having a real clear idea as to where the market is going. Um, I have been convinced that we were going to go higher, and then I have been convinced we're going to go lower. I've been completely convinced of both. In the meantime, we've gone lower, but not terribly lower, so we're pretty much still just right in the middle. And we're right around a very large frame line at 10,000, so we're not really in an extreme position. So trading on the large scale is pretty muddy. I believe a lot of people seem to be saying the same thing, that they're all just kind of waiting for something to happen. Usually in the past, when people have been waiting for something to happen, it's usually not a bullish sign. Clearly, if someone were really excited, they would be buying, and you'd see buying. And in the absence of that buying, it sort of speaks a little bit to the fact that at the very least, the buy side is not excited. The buy side is sort of weak. So I'm sort of taking that position. Excuse me. But in order to get some clarity on at least how we might be able to trade, one of the things we have to do here in these periods is speed up. I mean, that's just plain and simple. You just have to speed up your trading activity. So if you were trading for a few days at a time before, from hours to days, maybe a single trade that lasts no longer than a week, you're talking about getting down into the hours, just at the most an hour or two. So that's how big the trade has to speed up. If you were used to trading, weeks at a time, you'd be in a position for several weeks. You may have to cut down into just a day or hours. But if you're used to doing days and hours, cutting that back means hours and minutes. So the trades are pretty quick and pretty fast. I don't know that many people who are trading that actively. I trade that actively when I have time, but I really don't have time all the time to do that anymore. So I'm constantly operating my own business and trading still. So I'm in the days to hours camp, and to crank up the speed is even quite taxing for me. But that doesn't mean that I can't do it and just make a trade or two here and there every time I see something happen. But the trades are they're only going to last at most, a few hours. I'm not necessarily going to be holding anything overnight, and that's probably what will happen until we get further toward the extreme. So let's kind of maybe start the conversation there as we look at the daily chart here in BTC. We can see that the 10,000 line in the center represents the frame line, and the next frame up is 10,000 to 20,000, and of course that's not a real frame. Won't explain that, but that's not a real frame. That just would be the frame. We'd have a frame shift that would take us to 100,000 frame if we were to be able to stay above this 12,500 line, which we see we haven't been able to do. So no frame shift has occurred. It was looking, bullish until we started sinking below 10,000, and slowly but surely, it's kind of hard to repair the damage that has been done here. The next center frame is 5,000, so really we're being pulled, toward 5,000, and we have this nice trend line here holding us up so far. So this has been the rally of the entire move from the 3,300 area up to this 14,000 area. So we do have a nice fit for the channel. We see that the channel was tested several times along the middle, and then we can see that once it broke out, it also retested down along the top side, and then once it broke down, it retested the channel line, and now we're pretty much at the channel line. So lots of different tests that are going on about our channel line. So we feel pretty good about the channel. The channel is in resonance or in harmony. Later on, if a new high is made, then the deviation of the channel, the standard deviation, will increase, and it'll probably incorporate this trading activity inside the lines. But in any case, pretty good fit so far. So we like the signals that this thing gives. If this thing were to break down, I believe we would see a pretty precipitous decline to 7,500. What would that look like? It would probably look like this. It would probably be straight down is what that would look like. It might retest once and then come straight down, and then spend a lot of time healing and attempting to build, and then making its bounce here. And for the time being, we're just going to call it a dead cat bounce. If we wanted to know where that dead cat bounce would be, where we would expect something like that to be, we've got tools for that. This would be the Fibonacci reflection. So we're going to anchor this here. That's the reflection in price. Here's the reflection in time. And I'm just arbitrarily picking, a resistance point along the bottom of this channel. This isn't, I don't have a point out there right now. This is just to make an example. It's probably a pretty good example if this scenario were to play out. I believe this would be, a rough approximation. But so there would be our reflection box. Oh man, tired. So there's a reflection box of what could be a bounce off of 7,500 if we lose the center line. So for the more slow speeded home gamers, activity is tough to take in any kind of a long position until we get around the 7,500 mark, something in this area. If we were to see some rallies here, going to give a slightly different scenario. If we were to see some rallies here, I believe they would be contained, and we would make lower highs. So sort of like this might represent kind of a bullish scenario. It could attempt an HFT fakey out here to the top of the frame or the 62.5% line, but I wouldn't have much faith in it, and we'd be coming down here, going down, to kind of do a similar formation, perhaps here. So I'm going to label this one here green just to differentiate it slightly. So here's sort of two kind of competing scenarios, but I don't see a way for us to rally directly. That's not saying that it couldn't happen, but I just don't have enough clarity, so I'm not going to discuss many of those paths. If we were able to hold above 11,250, we talk about it then. At that point, that would sort of look like the Wonder Woman. Maybe it comes up here and then builds slowly and then, continues. Now, just to kind of have a visual way to represent what I think is probable, I'll always make the improbable path really thin. So that's a really, to me, improbable path right now. This one is secondarily improbable, slightly more probable, but not terribly probable. And then I believe just a good, nice sell-off is probable. And then a dead cat bounce back to, retest. Could be super shallow, could be as low as 9,110. So if you were to buy above 9,110 thinking you were buying big discount, you might be kind of sadly kind of disappointed because it may have a fast drop on you, and then it bounces around that area. So you have to just wait for this big value. Like, it will be deep value, but if you buy anything but deep value, the bounce won't give you any profit. There won't be much safe room to make money. If you were to buy the bounces here around 87.50, you'd have to really be dumping these pretty quickly, and maybe that's a good trade, but for the slow, steadier trade, down here in this side of the channel is sort of the next big move. Or as we were just saying, if we were to get a rally up here, I'd be happy to short, any rally back up to 11,125, something in that area. So I'd be, happy shorting up there, or I'd be happy buying here, but we're kind of in no man's land. Other than these two big trades, there are little ones along the way, but I'll sort of avoid going down that path. It's sometimes not a whole lot of value in there. You spend a lot of time making a forecast, and it just doesn't happen. A lot of detail, a lot of time wasted. So going to stick with the biggies. Here we also want to just cover, how low should we go? How low could we go? How deep could a retracement be? What if that upward trend channel is destined to be violated? So the reflection box down here that's giving us support, that gives us some, dead cat bounce type limits and type targets. Go ahead and pop this one in there as well. We give this one a red color, just so it's kind of associated with that downdraft. And then this one here would actually be the blue. This would be associated with the blue upward trend channel. And then the slope that's supposed to take us down here. I'm going to move this out of the way here, kind of getting a lot going on. This is that 9100. Used to be a big excitement point for us, but seems to be kind of weakening out. 9100 used to look like great money to me, but it doesn't look that way anymore. Maybe we'll get a dead cat bounce. That's about it. But anyway, here's the reflection box. The slope that leads to that reflection box is this line here. And you can see that this downward slope line pretty much contained the retest. And that was a nice short. I remember catching that pretty good. And then at some point, the reason why we love this short is because it would run straight into this downward slope line. Seeing that it's actually right there, this wouldn't penetrate through that downward slope line that much. If HFT got a hold of it and they wanted to really fake people out, they try to force it through there. I expect that at some point that might happen. If that does happen, I'll be ready to short anywhere along this line. And I wouldn't get faked out here. If you saw a big flash, I would consider that the greatest shorting opportunity we might have in the next couple weeks. So anyway, here is the blue reflection box, and this is providing the limits to us of this entire move. So down here is a slightly different number. I'll go ahead and pop this up. If we were to get this low, though, it would be like a harbinger of a serious dead cat bounce. This is 71.80. And this is the 62.5% line here. We're going to pop that in right there. And then, of course, we already penetrated the 37 line, which was up here. And we can see the market, really liked that price the first time down. First time it sold off that high, it caught that line there, 37, rallied immediately, came back, and then slowly but surely, this is the line that we're wearing out, and that's why I've become a little bit more bearish as of late. So we're going to look a little bit closer here. The next point of support, by the way, in the box, which rarely stops the market but causes a bounce, is the 50% line, which is approximately somewhere around this area here. And so that may provide that nice little bounce that we could see, but it'll probably be pretty short-lived as we head down lower into the frame. And then of course our time target is here. Our time target is September 29th, October 1st, something in that region, meaning that we could be going sideways until that point. We're basically just starting August, so we've got all of September. Once we get to September, now we start getting that gentle push from the trend channel. And once we get into October, pullbacks into the channel will be, probably pushed. And then once we make it back over to the right side of this downward slope line, which I'm going to highlight just a little bit more here. Once we get to the right side of this downward slope line, you could see rallies that maybe look like this. They pierce it the first time, they come back, they retest it. The market gets, pretty damn excited about it, and then boom, you're off to the races. So we got to get on the other side of this downward slope line. You can see sort of like the deteriorating time that would be passing us by as we get to where price and time become more balanced, and you may see it finally break through. And of course, this would be a really great buying opportunity down here. And then as things climb, if we start to see this activity going into August and September, of course, we would find that, fantastic. Could happen a little bit earlier, could happen here, and by the time we get there, we're already, rising. But that's according to the chart, according to how it looks now, we got some time. So, anyhow, that's what I'm going to be looking at. Looking to be going short, anywhere around, we'll call it, hell, there's the center of the frame. Anything above 10.5 is probably, decent. I'm going to light this up here. And then popping in our Murray Math frame, anywhere here in the 10.9s, 10.10s, something like that. Going to be looking pretty good. Or 11,000. I'm sorry, 11,000. So hope that helps. We'll be looking for that in the next couple weeks to the months, and we'll update when we get some more clarity.